Are you new to investing and feeling anxious about when to buy stocks or crypto? Trust me, I get it. Market swings can be nerve-wracking. But what if I told you there's a way to invest that helps take the stress out of the equation? Let's talk about dollar cost averaging, or DCA. So, what exactly is DCA? It's a simple strategy where I invest a fixed amount of money at regular intervals, like every week or every month, no matter what the price is. When prices drop, my money buys me more shares or coins. When prices go up, I get a little less. Over time, it helps me smooth out the wild ups and downs of the market. Now, why do I love DCA? First, it reduces the impact of volatility. I don't have to worry about buying at the perfect time because, honestly, nobody can predict the market. Second, it builds a solid investing habit. Think of it like setting and forgetting auto-pay for your future. Third, it helps me keep my emotions in check. I don't panic buy or panic sell just because headlines are screaming. And finally, DCA works best for long-term investors like me who want to grow their wealth consistently. Let's look at a quick example. Imagine I'm investing in both stocks and crypto. If I use DCA, I might invest $100 into each every month, no matter what's happening in the market. Over the years, this approach helps me stay invested and manage risk compared to throwing all my money in at once, which could backfire if the market tanks right after. But DCA isn't perfect. In a market that's rising steadily, investing all at once, what we call a lump sum, could actually make me more money. Also, DCA only works if I stick with it. It takes discipline, and it's not for people looking for overnight gains. Bottom line, DCA is a beginner-friendly, stress-free way to invest. Start with whatever amount you're comfortable with, stay consistent, and let time do its thing. If you want more tips like this, don't forget to like, subscribe, and check out my channel for more ways to invest smart and build your future. Thanks for watching.